The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we had a little bit of a sell-off yesterday. The Nasdaq dropped 10 handles, 100 handles. It went all the way down, $2,000 or $10,000, I believe, which is a big drop for the Nasdaq. And of course, we had a big sell-off in the S&P over 80 handles, and it's down a little bit more today. What I'd like to do, folks, is talk a little bit about what we posted yesterday. I had several questions about it, so I'll do my best to get it up here. I posted, I believe I did, shut the front door and raise the rent. I think I posted the, oh boy. I know I did because I've got it right here. The $64 question is, where is it? Let's move on here just a second here to see if I have it. There, I think I have it. Yeah, there it is. I posted it here. This is the, I think, let me double check just to be safe because it's early in the morning. Yes, I did. Okay, this is the S&P. It happens to be a 4-hour chart, goes back over the last 6 weeks. You see the high we made up there at around 32.40. We came all the way down to 29.30, and we made the big ABCD yesterday that came into 32.20. This is what I want to talk to you about because we went a little bit higher than that, and several people had put a very, very close stop on it, and they didn't get to where they wanted to be, which is on the short side of the market. So let me just give you a tiny bit of explanation of how to try to handle that. Now, what I'm going to do now is I'm going to put up a smaller version of that chart. This is a 4-minute chart, so it covers several hours. And what we're watching from the time frame that it hit 3,200. The high was actually 32.22.25. Then it backed off to 32.14. It came down 8 handles. Now, during that time frame between 11 o'clock and 1 o'clock, the market basically went sideways, and this was happening when the Nasdaq was going crazy to the upside. Now, what I tried to do, and this is from my experience, and believe me, that's all I have to go on, folks, because I'm a technician. I don't look at the news. I don't read the news. I don't care about the news, and the news doesn't care about me. So this is how I try to handle it. I learned this back in 1987 when I was in Switzerland. I'll explain that in just a second. You'll see the range that we had between 32.22 and 32.16, which was the low. So it dropped just about 8 handles, not very much. So it dropped about $400. And then you see it went sideways, and then we started to take out the high, which the ABCD was at 32.22 basically, 32.20, and we went up to 32.2650, which is the 1.27 expansion of that range over the past 2 hours. But look at the range if you would have gone up and put your stop right above the 61%, 1.618 expansion level at 32.28. You wouldn't have gotten stopped out. Now, the difference between 32.22 and 32.28 is 6 points. Okay, so that's $300. Folks, this contract is worth $165,000. And, you have to risk a little bit more when you're trading $165,000. There's no other way around it. You just have to give it a little more distance. And if you wanted to trade, watching it real closely, is put your stop beyond that 1.618, because when the market starts to run beyond 1.618, either up or down, you're in big trouble. So try not to do that. That's the main thing of what you're looking at. The other thing that I was watching is, the Nasdaq had been up 9 out of 10 days, which put it into a very, very tough area. So all I was trying to do is to see, what might happen to some of these things. And so what I started to do, because I have one of our listeners happens to be a fan of some of the stuff that we do here at TFNN, and he had an interest in Tesla. And I said, well, all I can do is tell you, what I'm looking at. And so what I did was I sent him the AI program. Just one second here. I'll get this up here. This is what I sent him. This is when we were making that high at 32.22. You'll see here, this is what we were expecting, was that Nasdaq at around 11:30 was going to start down and go down to, you'll see the prediction there was for 1460. That's a $300 drop between 1795 and 1460. Now, as things happened, you'll see here, just one second, we'll get this up here to try to show you what happened. There we go. Get this up here. I know this is in secondary thing here, but you'll notice here when we get up here, you'll see that the market did, go down to that level. So this was before the close, but we went below 1500, and now we're watching. So what do you do now? But folks, here's the way I look at it, and believe me, I'm just a technician, so you gotta remember that, bear with this just a little bit of leeway here, because if you look at this S&P here now, this is the key here for me. This thing's been in a real strong time frame. Rally. You'll notice the pattern there that bottom there on the 9th. That was a perfect 382 retracement off the bottom there, just spot on, and then we went up. Now we've given that back. The key number to watch today is right around 3130. I think that's what the low has been so far. We start going below 3130, folks. We've broken the 786 of that move, and we haven't done that since Hector was a pup, and that dog's 17 years old. So you've got to be really careful here. My personal opinion is we've had such a big run here, and this is how markets end, with huge spikes in volume, and that's what we had yesterday in the Nasdaq. And then unusually, and this is what's really key here, on the open interest, the market had been dropping open interest all the time. The market's going higher. Yesterday, the market's down sharply, and there's a big increase in open interest. So somebody came in and put their money on the table and say, okay, let's dance, and they went all in. So the key to watch is if we go below 3130 in the S&P, that's the first sign that something's really wrong. But if it starts to rally, if we don't get any higher than 3175 over the next couple of days, that's going to be a very, very significant spot. And the same thing in the Nasdaq. If we rally, I believe, more than 400 points, that would tell us that, yes, maybe this bottom is in, and maybe they're going to go a little bit higher. But remember, we just set some major records here without the help of the rest of the stock market, which really important. They only report basically the Nasdaq. And the Nasdaq, you've got 5 stocks, is about 50% of it. So you're only looking at about 6 or 8 stocks that the news is really reporting. Yeah, there's some stocks like Chipotle and some of the others that are going nuts, but those are just one-way Corrigans, and you've got to look at the overall market if you're going to look at these indices. So that's what we're paying attention to today. So what I'm going to try to do when we come back is to go over the same thing that we're looking at in the gold market to see if that's going to be anything. But, what we've got to do here is we've got to be able to try to find out if this market has made some type of a significant point to trade it. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I posted what the artificial intelligence is suggesting today, and that is if we go below the 3130, we're trading at 31.75 right now in the S&P. We should be down into 1230. That's another 4 hours from where we are, and then rally towards the end of the day. Two caveats here. If we don't start rallying after the last projection, which is around 2:30, in other words, the last 2 hours of the day, that means it's going to be down the whole day. The key figure to watch that we said when this show started was 3130 in the S&P. That's a 78% retracement of that whole move from July the 9th. And if we break that, that's going to be very, very dangerous to be on the long side. That's just from looking at it as a technical basis. Now, we've had very little rally since this market broke yesterday. We got down to 3140. We rallied up to 3165. That was a very small ABCD pattern, and now we're still holding this 3130. It's really critical, folks, because I really believe in these numbers. Very, 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 very much. And I think if it breaks that 3130, you're going to see a quick move down, probably below 3100 is what I would be watching if we were taking a quick look at that. We've got Mr. Z on the line. Would it be Mr. Z? How you doing?
I just saw Billy Ray. He's doing good.
Looking good. Feeling good. What's up, buddy?
Thank you so much for bisecting this market action here. Just wanted to throw in a supplemental question. First, this. Yesterday, that reversal or that decline off the high in the Nasdaq September futures peaked up over 11,000, and the drop intraday was 495 NQ points. So a good move, almost 5%. Now, into like 1 or 2 or 3 a.m. this morning, there was a meager bounce, only meager. And just in the past 30 minutes, price has declined underneath that low of late yesterday. What I wanted to ask, given what I've just described, is there anything that you do in your work that gives you a confident guess of whether this decline off the 3 a.m. high will be another 495 points, or more or not? I'm wondering if there's something that you work with that can give, an answer to that question. I can appreciate if you do not, but I thought I'd throw in the question.
Well, John, I appreciate the question. The problem is, if I told you, I'd have to kill you. John, I really, you've known me for a very, very, very long time, and I keep things as simple as possible. This Nasdaq is it's a 1,000-pound gorilla, and I really stay away from that because it just takes too much energy, on the upside and the downside to keep track of it. Whereas if you look at the S&P and the Dow Jones, the Russell, you'll get a better idea of what the actual market's really doing, because when you're doing that Nasdaq, you're basically trading about 8 or 10 stocks. And so what I did yesterday was to watch Tesla, because here we had Tesla hit 1795, and everybody in the whole world is bullish. And at that time, Tesla hit 1795 and immediately broke 80 points. This is when the Nasdaq was still going up. And then when you looked at what Tommy was talking about earlier this morning, we had the VIX. The market's going up. We're up 500 points in the Dow Jones, and the VIX is up. Johnny, the only guys that are in there doing that are the ones with the big fat wallets. I mean, nobody fades that kind of stuff. So that was
you're exactly right on that point. Yes.
Yeah, I mean, you got to say, what the heck? I said, who's doing this? Well, that's big money out there. And, so it turned down, whether it goes down more or not. All I can tell you is that 3130 is really key in the S&P. Now, it hasn't done very much. We got down to 3129.75, and we haven't broken below it. So 3130 to me is the key thing to look at. Because if we get a rally here, just a small rally, let's say we rally up to, say, 3155 or something, and then go below it, then you're looking at something's happening. But 3130 is a really key number. There's a lot of algo traders out there, so they know these numbers. So that's all I'm looking at. 3130 is a really key number.
Yes. Speaking of algo traders, I just have to share this with you. And this doesn't help us predict or trade short-term whatsoever. But a year ago, summer of 2019, a development occurred that I just found as highly significant. Specifically this had to do with Goldman Sachs and Amazon. And we've listened to people document over the past 5 years how the Goldman operations have essentially computerized virtually all of their trading operations, where their once very large human trading staff had been whittled down and replaced by computer systems. I found it highly significant that last summer some very skilled person within Amazon Web Services, one of the most complex and successful computer systems, I think, on the planet, was hired into Goldman Sachs at the partner level. So that just reaffirms this idea that the big money is clearly dominated by those computerized algorithmic systems, and attempting to deal with that, like you say, getting back to simplicity is absolutely key to survive and profit from this, is my guess.
I agree with you, John. I don't know if you read the book about Renaissance Capital, but the main thing that was in that book that was so important, one of the guys that started working for D.E. Shaw, which is another artificial intelligence group out of New York, was a young couple, Madeline and Jeff Bezos, in 1986. Of course, he went into this was in the early 80s, and he went into Amazon instead. So these are people who have been looking at this a long time. So they are numbers. They are significant from our perspective because we watch them so closely, but there's something we can use when we do these. So that's why we use them. The same thing we're looking at in the gold market today, John. Let me quickly do this because we have David Paul coming on very, very shortly. We were looking for the low to come in this morning at 1791 in the gold market, and that's exactly what we hit. Now we're looking at that same number, 1791. We've already rallied $20 off that bottom. That number, 1791, is exactly like the number we're looking at in the S&P at 3130. If we get below that, it's be careful. That's cuidado, as they say in Spanish. So that's what we're paying attention to. Hey, buddy, thanks for calling in.
By the way, I'm looking at your chart on Tiger TV. I'll just have to share this with you. Well, no, I'll let you go, and we'll listen to
hey,
Dr.
we'll catch
Paul.
you tomorrow.
Thanks so much for your time.
We got to talk about soybeans tomorrow, buddy. 877-927-6648. Stay tuned for Dr. David Paul.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Dr. David Paul on the line. David, are you there?
Yes, Larry, I'm here. Can you hear me okay?
You're coming in like you're sitting right next to me here in the desert. Listen, we have a question actually it's a double question. Just two people asked the same question. Given the fact that we had this really incredible volatile day yesterday in the Nasdaq, not so much in the rest of the market. Well, the Dow was a little bit, but does the Vector Vest program change after a big day like we had yesterday? Are you able to answer that question?
Yeah, sure. Going into the trading day today, in fact, can you see my blue screen there, Larry?
It's clear as a bell. You're on.
All right,
you're on the air.
I can go out of that, and I'm going to go into the front page of VectorVest, and if you can see the little traffic light, the traffic light says the color guard is mildly bearish. VectorVest does not advocate buying stocks at this time. So for the yesterday, based on that reversal that happened, the short-term trend is down. The underlying trend on VectorVest is up, and the longest measure of the trend is up. So, small boats turn the corner faster than aircraft carriers. So the shortest measure of the shortest measure of the trend went down yesterday, and so it in terms of the trend position, that changes. Certainly, this is a big week for earnings, and as those new earnings numbers come in, those will be fed into the VectorVest program that particular day. So the data that you get from VectorVest is exactly the same data as Wall Street analysts will be poring over. You'll actually get it before they will, because they won't be at work when you get it. So if there is a change to interest rates in the bond market, if there's a change to inflation, then the valuation algorithm calculates the value of a share based on Dr. Toledo's, the founder of VectorVest's proprietary valuation methodology that looks at earnings, inflation, and interest rates. So as those things bounce up and down, it's quite a complicated algorithm. So as the economy changes on a day-by-day basis, those valuations and fundamental measures will change on a day-by-day basis. We don't try and predict, we try and react to what's happening, and that's done every evening, certainly. Yeah. So both the technical picture will change on a day-by-day basis, and the fundamental picture will change on a day-by-day basis if, in fact, anything happens on that particular day.
Wow, that's great. That's what we want to know. Go ahead, my friend. Show us what you're looking at today.
Well, Larry, the last time I was on here, I talked about my short-term swing trading methodology with VectorVest, which quite a big part of my personal wealth is in at the moment. Today, I'm going to talk about a longer-term position trading methodology that we refer to as worry-free investing, and it's a great place to put your long-term savings, your retirement money. And I'll be unfortunately 65 at the weekend, so this is probably quite appropriate.
Well, happy birthday! I don't have birthdays anymore, so if you need an extra one, I'll send it out to you. So this is good. Go right ahead, buddy.
So there's the VectorVest composite, folks, of the USA. And those red and the green signals represent the VectorVest medium-term market timing model. And the blue and the green line studies represent the momentum of the composite. We call the market timing indicator. And much more importantly, the breadth of the American composite. This is measured in 8,000 shares. So this market is struggling to get up. It's flat, but the buy-sell ratio is falling out of bed, and that's not good. And we refer to the buy-sell ratio as the canary because it's a tremendous leading indicator of change. So I don't believe, Larry, at this time will be different. Certainly it can hang up there, and that divergence can last an awful lot longer than my patience. But nevertheless, I don't believe this time will be different. Dr. Toledo's fundamental model is that we are in a bear market, and that I believe that we're at some stage going to get down and test these March lows. Maybe not take them out, maybe stop at 78% of them or something. But I think that sooner or later, this will crack on the downside. Yesterday was a great trading day for me because it went up in the morning and then promptly turned and then fell in the afternoon. So two really great trades intraday, which was good. I'd be looking for a short trade today if the opening range, a la your book, Larry, if the opening range is under, I look at the 15-minute range, Larry, is under 3140. So that's what I do for income. What I'm going to talk about now, there's the S&P, and the S&P reversed very, very strongly yesterday. Gapped up a bit, opened up a bit, and reversed. I think that's what old Larry Williams used to call a gap and snap or something like that. The VectorVest people in the UK always say that you can tell what David's trading because the instruments I'm trading, I still use bars, whereas if I'm not trading it, I put up candles. But I started trading in 1982, and people asked me, why do you still use bars? And the reason was that in 1982, I had to hand chart, and bars are much, much easier to draw. So so that's why I feel most comfortable with the bar chart, but that's just based on practice. So the VectorVest worry-free methodology, folks, works very well in the US, not quite as well in the UK, although my pension money is in it in the UK. The objectives are clearly capital appreciation, 2, dividends, and 3, income from selling covered calls. Now, that you can do relatively easily in the US, and it is the most conservative form of options trading. Very difficult to do in the UK. Anybody listening from the UK, options are largely illiquid at the retail level in the UK. So if you want to get involved in options trading, you really have to do it in the US. And our customers in Canada say the same thing, that the Canadian option market is very difficult to access at the retail level. So that's the objective. Now, the key to this is a VectorVest measurement called relative safety. And relative safety measures the safety and the predictability of the financial performance. So what the algorithm does, Larry, is that we buy the data from Thomson Reuters. We buy the data from another company called FactSet as well. And the algorithm looks at the balance sheet, the income statement, the cash flow statement for the last 5 or 6 years, and goes through all of that and looks at all those ghastly financial ratios and makes a judgment as to, 1, is this company making money? And 2, are all those financial ratios getting better? And on a scale between 0 and 2, a relative safety above 1.3 finds a company that's making money and all the financial ratios are getting better. It looks at earnings consistency, the company size, a little bit of volatility, how long the company's been around for, dividends, very important. A company that pays even a small dividend, that's got a history of growing that dividend safely, is a safe financial.
We're going to pay a few bills, but this is great information, David. Thank you. We'll be right back with David Paul, folks.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're talking with David Paul. David, why don't you continue, please?
Yes, I was just talking about the cornerstone for worry-free investing, a hands-off investing strategy where you can play a lot of golf, do a lot of fishing, whatever, is relative safety, the safety and the predictability of the earnings. I'm quite sure there's an awful lot of technicians watching or listening. VectorVest is an outstanding product because it does all the fundamentals for you, does all the heavy lifting for you so you can focus on what you're good at. The next thing is the comfort index. Now, the comfort index measures a strong trend. So although we want to find shares that have got outstanding financial performance, we want the darn things to be going the right way. We want the share to be doing what we want it to do, i.e. it's rising. So the comfort index measures a share that's in the throes of a strong trend with little volatility and a little bit of the fundamentals. The fundamentals are improving. On a scale between 0 and 2, above 1, it's trending. Above 1.2 is trending reasonably strongly. So this is the cornerstone of VectorVest, but we want to try and put together the best of both worlds. Outstanding fundamentals, a share that's rising, and a general market that's rising. And the general market has been rising since the 6th of April. That's a little uni search that finds those shares for you. Very simple. I'm looking for a share above $1, relatively low volume because it's not a trading strategy. I'm trying to get rid of all exchange traded funds and things like that. I want the comfort index to be above 1.2. In other words, it's trending. And I want the stock's growth rate, earnings growth rate projected at greater than 14%. I want to find a share that's growing its earnings. And very importantly, I sort those all by relative safety. I bring the shares with the safest track record to the top of the pile. So I find shares initially that are in the throes of a strong trend, that are growing their earnings reasonably strongly, above $1, with reasonable traded volume, and then I sort them all by the safest ones. Remember, this is a hands-off strategy. You want to try and get yourself to a point where you can make your money work with a few minutes work a day or a few times a week. So how does this work? When we get a VectorVest buy signal, we got the last one at the start of April. We run that search and we buy 10 to 15 of the top RS stocks. Now, if the general market is going up, relative safety stocks are resilient and they tend to go up with the market. If a company drops the ball, then you use the VectorVest stop loss, you get out, and you resort and replace. If the market is rising, you want to be fully invested. Now, markets are like individuals. They breathe in and they breathe out. Sooner or later, we're going to get one of those red signals. Okay, it could happen tomorrow, it could happen in September, but sooner or later it's going to happen. Now, first of all, when the market's falling, we don't buy any more stocks. We're much more likely to get stopped out, Larry. If we get stopped out of a share, we build a cash position. Now, in the crack in February, we were stopped out of everything. Okay, we were stopped out of everything. When we get the next confirmed up, well, you run the sort and you replace. So that's the process. It's very simple. Some years there is a fair amount of trading. In 2019, we had 2 trades the whole year because the market was rising. So that's the process. And I've tested this because my own money was going into it. I tested it over 20 years from 96 to 2016. Since 2016, I've been testing it going forward with real loot. That's the performance. It turned $100,000 into $683,000, which is, if I can get my pen, 17% compounded a year, excluding the dividends. Wow. Was it easy? But it wasn't easy, Larry. It takes testicular fortitude because the market went nowhere from 2000 to 2003, as we all know. And it went down in the crisis, but it's been rising very nicely since that. So the American market pays about a 3% dividend yield on top of that. And my colleagues in North Carolina tell me that by writing covered calls conservatively, you could quite easily double that 3% in income from covered calls if you do it intelligently. So it works. Now, I've been running my own money on this, my pension money, and God, it's not so far away, I know. It's quite depressing, actually. Last year in the UK, the worry-free portfolio was up 40%. And we were going great guns until February, and we got stopped out of everything, and we lost 14%. So we were up 40% minus 14, 15, depending where you got out. So for the year 2019 into February 2020, we were up about 25%, which is what it's supposed to do. Now, that's what it's done since April the 6th. Those are the top 10 shares from April the 6th when we got that signal, and those are still running, and that portfolio was up 29%, and the market's up 20% in that period. Clearly, it's been a market that's rising and rising in a way that I really haven't experienced since the late 1990s. But sooner or later, we'll get a down signal, and then when the market is rising, you're very rarely stopped out of a high RS stock. When the market is falling, then there's a much higher probability you get stopped out. If that's the case, you build a cash position. There are very few rules in the worry-free plan. It's totally and utterly mechanical. And if you live in the US, you can in fact use our robo-trader through selected brokers to make the darn thing run automatically so you don't have to do anything at all. In the UK, we can't offer that because the regulator says that there still has to be a manual person make that decision. Otherwise, we'd be offering financial advice. But many, many people are running the worry-free trading plan in the USA through RoboTrader and linking it to a range of VectorVest approved brokers. And that can all be set up relatively easily indeed. If I was managing your money, Larry, I would put probably 70% of it into worry-free investing and the other 30% into my shorter-term swing trading with VectorVest. I think that without a doubt, most people who are listening to this show are probably technical analysts. You don't have to forget about all the work that you put into your technical analysis over the years, but VictorVest will make sure that in the stock market you are trading in shares that have got solid fundamentals, and in worry-free investing, we define solid fundamentals as the ability to make money consistently. And in
we've got to pay a few bills here. David, stay with us till the break, please. We'd like to let the folks how they could reach you, okay?
Good man. Thanks, Larry.
We'll be right back with David Paul, folks.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam! If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're talking with David Paul. David, how would the folks reach you?
David.paul@vectorvest.com. David.paul@vectorvest.com. They can get through to me easily. I just...
Well, listen, I want to thank you for joining us. We'll have you on again soon, but the information was absolutely terrific, David. Thank you so very much.
Okay, well, that's great, Larry. Anybody that wants to try out VictorVest, then if you head over to the website, you can take a 30-day trial. 30-day trial is $10 or something, okay? see how you go with it. All right.
All right. Thank you very much, my friend. We appreciate it very, very much.
Cheers, Larry. All the best, everyone. Bye-bye.
Okay. David Paul, folks, I want to end the show here with a chart here about natural gas. I put this up here. Remember, we had an ABCD pattern up there at 192. I think it was dollar bill down there in Florida. It says, is this a bear market? And as we said, the trend is down because we have lower highs, lower bottoms. That's what we're looking at here. But here's what's important, folks. One of the major people in the whole business, one of the brokerage companies, sent this warning here. And I don't know if it means anything or not, but when they send this out, you want to pay attention to it. This is about natural gas futures, and it talks about the price of $1.25. If it goes below $1.25, they're warning you that they have the option to sell you out at any time. They're worried about what happened to natural gas. If the prices decreases below $1, I mean, here it's trading at $1.72, and they're worrying about $1. I don't know if this is a fear tactic or fake news, whatever it is, but the fact that they sent this out to their trading desk is very, very important in my opinion. So we're going to be watching that very closely because we saw crude oil drop to a negative $27 a barrel, if you remember that. I don't know whether it's going to go negative or not, Duffy, but the fact that they sent this out, and that's why I'm a technician, folks. I don't understand this stuff, but you look at the prices, it'll tell you whether it's going to hold or not. You know, that's the main thing. Now, tomorrow, I'm going to focus on the grain market, especially soybeans and corn, because I think we got a chance of an up move here. 877-927-6648, and may God bless.